So what's an ETF? An ETF is a basket of stocks that provide automatic diversification through one holding. That's right, one holding. You automatically get exposure to a small piece of everything. Think about it like a basket of stocks. So when you buy the basket, and in this case the ETF, you get a piece of everything else. Why would you want an investment like this? There are a few reasons. Stay to the end to find out why this is one of the most powerful investments you can get in your portfolio. Before I get into it, click that like button down below and hit subscribe to our channel for more great content on personal finance and everything else money. Okay, so an exchange traded fund, usually referred to as an ETF, is an investment fund that you can buy on the stock market just like you could with an individual stock. An ETF holds assets such as stocks or commodities or bonds, but for the most of the platforms like ours, it holds individual stocks. The first benefit is diversification. The primary goal of the ETF is usually to track an index, such as the S&P 500 or Dow Jones Industrial Average. By buying an ETF, you're automatically buying into hundreds or even thousands of stocks that track the underlying index. You don't own them each individually, but you do own the index or basket of these stocks. So by buying one ETF, you're automatically diversified within a certain index. You save time by not needing to go buy each stock in that index, and then you can build a passive portfolio from there. When I got started investing, I was overwhelmed with the amount of stocks and research that I felt like I needed to do. When I figured out that I could just buy a few ETFs and get exposure to the broad market, it simplified everything. Speaking of passive, that is our second benefit here. ETFs are at its core passive. And it's why they were even created, as they provide an incredibly simple way to invest with a passive strategy. If you're interested in the difference between passive investing and active investing, we're gonna have plenty of videos on that topic that will be linked in the description below. Now, the last benefit is cost savings, fees. Because their goal is to simply replicate and track an index, the costs are really low. Most ETFs don't have some fund manager up in a corner office making investment decisions for the fund. And therefore, they can pass these cost savings on to you instead of paying that fund manager. No one wants that anyways. So let's talk about who can really benefit from an ETF. Who is this good for? Well, for investors looking to get diversification at a low cost across the market, and for that person like me who didn't want to spend their entire time researching different corners of the market, figuring out which stocks to buy, you can buy an ETF that fits your needs and targets their investment goals in one simple investment. Now, let's take a look at an example of an ETF. Vanguard Total Index, usually referred to as VTI. A lot of you may have heard of it. Keep in mind, this is not a recommendation for VTI, but simply just an easy example, okay? I gotta say that. So, this ETF's primary goal is to track the performance of the US Total Market Index. To do that, VTI holds all the individual stocks publicly traded that represent the US market. Like, we're talking Apple, Google, Walmart, things you use every day. So if one were to purchase VTI in their portfolio, they would automatically be getting exposure to all the stocks in the entire US market. So to recap, an ETF provides easy diversification, typically has a low cost, and is a great way to build a diversified portfolio without needing to do a bunch of research. No one wants to do that anyways. If you want to dig into this more, we'll link some additional resources for you below. And as always, like, subscribe, comment. We'd love to hear from you. Thanks so much again for listening. I'm Tony from Wealthfront, and we'll see you next time.